Hey everyone, welcome to another video from Rookie Investor. In today's video, we will go over the 11 different stock sectors an investor or trader will encounter in the stock market. You may ask why stock sectors are important to know, which is a fair question. Well, allow me to answer that. The breakdown to sectors helps in three ways. First, it allows investors to categorize companies in the market. Second, it can ensure that you have a well-diversified portfolio. And third and last, it allows you to compare your stock to the sector's overall performance. And now that you know why it is important to know the stock sectors and of course the sector your stock belongs to, let's proceed with the different categories and explain them a bit. I will go over them based on their current market weight. Also, we will take a look on the ETFs of each sector. For those not familiar with the term, a sector exchange traded fund, also known as an ETF, is a pooled investment asset that invests specifically in the stocks and securities of a particular industry or sector, typically identified in the fund's title. Each of the sectors we will overview today has its respective ETF and we will go over them. To be accurate, many firms will offer their own ETFs on sectors as well, for example Vanguard and Fidelity. In our video though, we will check on the S&P 500 ETFs for each sector. So let's start. The sector with the highest market weight, 26.5%, about pretty much one-fourth of the entire market, is none other than the information technology sector. It makes sense as in this sector you will find companies such as Apple, Microsoft, Yahoo, IBM, Cisco, Oracle, Intel, and Nvidia. The innovation technology sector covers companies involved in the different categories of technological innovation. Some companies in information technology focus on creating software or providing services related to implementing technological solution, while others are more involved in building the equipment, components, and hardware that make tech possible. Information technology also includes makers of semiconductors and the equipment used to produce semiconductor chips. Looking at the S&P 500 Information Technology Index, we can see that the sector has performed greatly over the past 10 years, with great returns. Since the beginning of the year, though, the sector shares the same fate as the rest of the market. This makes absolute sense considering that leading companies of the sector are on a downturn. The second sector with the highest market weight, that of 14.6, is healthcare, especially after the 2020 with a global COVID situation that also makes sense. But overall, healthcare is considered a safe bet as every person will need medical care at some point of their life, some more than others. To note here that the health sector has two primary components. One component includes companies that develop pharmaceuticals and treatments based on biotechnology, as well as the analytical tools and supplies needed for the clinical trials that test those treatments. The other encompasses healthcare equipment and services, including surgical supplies, medical diagnostic tools, and health insurance. Some of the leading companies found in this sector are Pfizer, United Health Group, Cigna, CVS Health, and Vertex Pharmaceuticals. Looking at the S&P 500 Healthcare Index, we can see a similar pattern with that of the Information Technology Index, with the exception that their decline so far is not as strong as theirs. As I mentioned earlier, I do consider the healthcare sector one of the safe bets in the market. Moving on to the third sector with a higher market weight, that of 11.7%, we find the consumer directory sector. The consumer directory sector covers goods and services for which consumer demand depends upon consumer financial status. For example, if you make $40,000 per year, you probably buy a different car than someone who makes $4 million per year. The sector includes companies that sell higher priced items like automobiles and luxury goods, as well as leisure products. You can find both brick and mortar and e-commerce based retail companies in this category, along with hotel and restaurant stocks. Some of the leading companies in this sector are Amazon, Tesla, Ford, Starbucks, and General Motors. Another well-performing sector over the past 10 years, it did suffer a bit during the 2020 pandemic, but quickly recovered to new all-time highs. Then, as 2022 entered, a sharp decrease occurred, which most likely will continue given the inflation situation. The fourth sector with a market weight of almost 11% is the financials one. The financial sector includes businesses that are primarily related to handling money. Banks are a key industry group in this sector, but you also will find insurance companies, brokerage houses, consumer finance providers, and mortgage-related real estate investment trusts among financials. Top companies in these sectors are Warren Buffett's company, Berkshire Hathaway, JP Morgan, the biggest joker when it comes to financial predictions, Bank of America, Morgan Stanley, Goldman Sachs, and Wells Fargo. Aside from Berkshire Hathaway, I have no respect for the majority of the financial sector companies, and it is something I will expand a lot on the videos to come. As you can see, the sector, despite rising over the past decade, it does not look like the indexes we have seen in the prior sectors. It didn't have the same rise in value and for quite a few years was pretty stable. Currently, the sector is on a downturn as well. The next sector bears the name Communication Services and has a market weight of 8.35%. The communication services sector is the newest of the sectors and includes a couple of major areas that used to be part of other sectors. Telecommunication services providers, including both wireless telecom networks and providers of old-style landline services, made up one wing of the sector. On the other end are media and entertainment companies, including both older media like television and radio, and interactive media via the internet and newer forms of communication. Some of the leading companies in these sectors are Alphabet or Google for the common people, Meta, former Facebook basically, AT&T, Comcast, T-Mobile, and Nexstar. Looking at the S&P 500 Communication Services Index, things look nothing like the other sectors. Stable over the past decade, major spike in 2020 and 2021 like all the sectors, but towards the end of 2021, a sharp decline which erased all the pandemic gains. The sixth sector is the industrial sector with a market weight of 7.89%. The industrial sector includes a wide range of different businesses that generally involve the use of heavy equipment. Transportation stocks such as airlines, railroads, and logistic companies are found within the industrials sector, as are companies in the aerospace, defense, construction, and engineering industries. Companies making building products, electric equipment, and machinery also fall into this sector. Companies like Waste Management, FedEx, Caterpillar, and 3M are in the list. Their index resembles quite a lot the previous sectors we have seen, with the financials to be the closest one. Moving on to the consumer staples sector with 6.67% of the market. The consumer staples sector includes goods and services that consumers need regardless of their current financial condition. The category includes companies in the food, beverage, and tobacco industries, as well as household and personal care products. Those companies are not greatly affected by inflation, as regardless the price, consumers will have the need for them. You will also find retail companies that specialize in selling staples such as supermarkets in this group. Coca-Cola, Warren Buffett's favorite stock, is in this list. Procter & Gamble, PepsiCo, Hershey's, Kraft Heinz, Kellogg's, and Kroger are some of the other big names here. Looking at the S&P 500 consumer staples, you will notice that they didn't experience the previous index's rise over the past decade, but they rose slowly, and even during the shutdown they didn't suffer as many losses as the other sectors. Also, it's quite obvious that despite declining in 2022, they haven't experienced any substantial losses, as consumer staples will be always in demand and consumers will have to bear the inflation costs. This is also considered a safe bet sector for the long run. Next is the energy sector with a 4.54 market weight. The energy sector covers companies that do business in the oil and natural gas industry. It includes oil and gas exploration and production companies, as well as producers of other consumable fuels like coal and ethanol. The energy sector also includes the related business that provides equipment, materials, and services to oil and gas producers. Oddly enough, though, it doesn't include many renewable energy companies, which instead are considered utilities. We'll talk about utilities later, as it's another sector. Few of the largest companies in this sector are the Saudi Aramco, ExxonMobil, Chevron, Shell, BP, and Gazprom. Energy has by far one of the most interesting indexes we have seen. The energy sector behaves weirdly, like a roller coaster, and it's very tied to the oil and gas prices. During the 2008 housing crash, for those who remember, the price of oil went really down, so the sector suffered. Back in 2014, when there was a conflict and disruption in production in the Middle East, the prices increased quite a lot and the sector boomed. Let's not go far. The best example is what happened during the pandemic, when people didn't travel as much, which resulted in a decline on the demand of oil. The sector suffered a 70% loss. But once the war between Russia and Ukraine started, and the embargo to Russian oil and gas imposed, oil and natural gas skyrocketed. As a result, the energy sector boomed once more. With the restrictions still in effect, the winter to come could see the energy sector going higher than ever before. The ninth sector is the utility sector with a market weight of 3.17%. The utility sector includes just about every different type of utility company you can think of. Within the sector, you will find utilities specializing in making electrical power available to residential and commercial customers, as well as specialists in natural gas transmission and distribution. Other utilities are responsible for delivering water to customers, for example. Some utility companies engage in more than one of these different subspecialties. In addition, independent producers of power and renewable electricity also land in the utilities sector, even though they don't exactly resemble the traditional regulated utility in an era of deregulation. The biggest companies in this sector are the NextEra Energy, the Southern Company, Dominion Energy, National Grid, and American Electric Power Company. This is a very safe sector to invest in. Over the past decade, they have risen, but definitely much less than the other sectors we have seen so far. Currently, and despite the overall decline in the market, they continue their growth, as people will never stop requiring utilities such as gas, electricity, and water. Inflation doesn't really matter in this sector either. Next is none other than the real estate sector with a 2.86 market weight. The real estate sector generally includes two different types of investments related to real estate. Some stocks in this sector are responsible for developing new real estate projects and then managing them by obtaining tenants for various spaces within the project property. In addition, most real estate investment trusts, which are special tax favored business entities that operate in various areas of the real estate industry, get counted as within the real estate sector. Some of the largest companies in these sectors are the American Tower, Prologis, Crown Castle, Equinix, Public Storage, and Realty Home. I tried to find a chart that will include the 2008 housing market crash, but all the indexes either start from 2013 or later date. Similar pattern to what we have seen on the first sectors, solid increase over the past decade and a boom after the pandemic. The story that we are out of houses in the United States is still floating around. I hope now that the rates are above 6%, people think twice before buying overpriced homes. I see further decline here as long as the interest rates continue to grow, and between me and you, there is a 100% chance that this will happen. The 11th and last sector is the materials sector with a 2.55% market weight. The materials sector includes companies that provide various goods for use in manufacturing and other applications. You will find makers of chemicals, construction materials, and containers and packaging within the materials sector, along with mining stocks and companies specializing in making paper and forest products. The largest companies in this sector are Nutrien, US Steel, Celanese, and Rio Tinto. Like the first sectors we have seen, the materials sector saw a very solid increase over the past decade, declined strongly during the pandemic, but it did see great returns after. Since 2022, the sector is declining. Now that we have seen all the sectors, I would like to demonstrate how to compare a stock to its sector. This can definitely help you to see if the stock you have invested in is in par, outperforming, or underperforming the market. I use TradingView for this, and I will use Netflix as an example. Netflix belongs to the communication services sector. Once you open the full chart of the stock you picked, Netflix in our case, click the plus button on the top left side of your screen. It is placed next to the stock ticker. Once you click it, on the pop-up window, type in the sector, pick indices, is it an indice, and click the same percentage scale. The measurement of the S&P index starts on 2013, align them, and then you can see the real performance. Netflix over the same time period saw an increase of more than 600%, while the communication services sector is at 12.33%. Netflix is clearly outperforming its sector in the past 9 years, and at some point by an enormous 2000%. You can compare two or more stocks of the same sector to see how they perform against them or against the sector. Always remember that some sectors are growing slower but are safer to be, and some depend heavily on what is going on the global economy. Your best bet is to be well diversified, as a good portfolio includes companies from every sector and not just one. I hope that this video sheds some light to the different stock sectors you will encounter in the stock market. I will make more videos about stock investing, so make sure you hit the subscribe button, and of course, if you like the video, please smash the like button, it will mean a lot. Thank you for watching, see you in the next video.